Welcome back to the channel. My name is Elaine. Today I'm going to talk about one of the biggest expenses that nurses have, and this is not something that you're probably thinking about. It's not your mortgage, it's not your car payment. Today we're going to tackle taxes. It is tax season right now in America, and as somebody who is working a full-time job, you are probably going to be paying the most amount of taxes compared to other people who are doing part-time or who are doing like other stuff like having their own business. Me and my husband just filed our taxes with our accountant, and oh my goodness, we did pay. We owe taxes, and I think we owe, for federal taxes, we owe about $10,500. For state, we owe about $2,000. And today I'm going to talk about how we were actually able to go lower with the amount that we owed based on some strategies that we did our money. And so I actually have a lot of tips for you in order to legally lower your taxes as nurses. But today I want to talk about the three main things that we did to lower our taxable income, also lower down our taxes. So as a W-2 employee, we pay the most amount of taxes. So if you're working full-time right now for a hospital, then more than likely, if you look at your paycheck, if you look at your pay stub, a big portion of your money goes to taxes. But there are legal ways that you can lower down your taxable income or lower down the taxes that you owe at the end of the year. So the number one thing that you need to do is to understand how your income is taxed. So a lot of people think that the more money they make, the more taxes they have to pay, in which in some cases that is partially true. A lot of people have this misconception that if they earn a higher amount of money, their entire paycheck or their entire income is going to be taxed at a higher rate. That is actually not true, and that is why, working overtime may or may not increase your taxes, because most of the countries in the US also specifically, we have what we call a progressive tax system, meaning that there are brackets of your income that is taxed at different rates. I talk more about this in one of my videos in here, and this is why I no longer work overtime as a nurse for that reason. So I have the federal income tax brackets for 2025 in here. And for somebody who is married filing jointly like me, and I make about, for example, $200,000, I would be in the tax bracket of 22%. But that doesn't mean that my whole paycheck is going to be taxed at 22%. It means that from 0 to 23,000, it's taxed at 10%. From 23,851 to 96,950, it's taxed at 12%, and from 96,951 to 206,700, it's taxed at 22%. Understanding how your income is taxed is really one of the first things that you have to know in order for you to know how you can lower down your taxes that you owe at the end of the year. So essentially what you want to do is lower down your taxable income as much as you can. There are a lot of things that you can do as a W-2 nurse or a full-time employee nurse to do this. Number one thing that I do and my husband does to lower down our taxable income is by investing and contributing to a employer-sponsored retirement account, so a 401k or a 403b. It means that if you look at your paycheck, this money is taken out of your pay before it even gets to you in your bank account, meaning that they have deducted this already. It lowers down your taxable income, and for 2025, the maximum amount that you can contribute to your employer-sponsored retirement account is about $23,500. This is why a lot of people who thinks I make a lot of money are wondering how I can contribute to a Roth IRA with that amount of money. Well, at that time, me and my husband are maxing out on our 401ks, on other accounts like a flexible spending account or a health savings account, and all of those can lower down your taxable income, which makes you eligible to contribute to a Roth IRA. And with that said, besides the 401k, there are other investment accounts that you can invest in that it's also tax advantage, and one of them is a flexible spending account and the other is a health savings account. So these two accounts are kind of similar in a sense that both of them are meant for medical expenses, but flexible spending account is something that actually expires at the end of the year, so you have to use it or you lose it. Health savings account, on the other hand, is something that you can actually use for retirement, and I really recommend you take advantage of this account. I made a podcast on this specific account that you can check out in the description down below. A health savings account is an account that you can use for investing. Like, the money that you put into this account is something that you can invest in the stock market, and it actually grows tax-free, and you can take the money out tax-free as well. So the only caveat for this one is that you have to have a high deductible health plan, and then the second one is that the money has to be medical expenses, but after 65 years old, you can use that money for, and it's still going to be tax-free. So like I said, like I talk more about this really great investment account in one of my podcast episodes that you can check out down below. So that is the number one thing that me and my husband does to lower down our taxable income, is taking advantage of this retirement accounts. And if you are working full time and not contributing anything to your retirement account, then I really recommend that you do if you want to lower down your taxable income. So a little side note on this first, like tip that I want to give you when it comes to your full-time jobs and how you can lower down your taxable expenses. I actually had a talk with our accountant, and it turns out that me and my husband are actually not withholding, a large amount from our paychecks. So I want to talk a little bit about adjusting your W-4 form. So this is a form that you sign when you're starting a new job. This is something that the IRS has on their website. It is the employees withholding certificate. So what it means is that, so what the W-4 is that it is a form that your employers use to calculate how much taxes they can withhold from your paycheck throughout the year. So it means that if your employer withholds too much money, then at the end of the year you get a tax refund. And then if they don't withhold, or they withhold like very little, then that means you're gonna owe at the end of the year. So this is where you actually claim for dependent. So in our case, our accountant actually, she recommended me and my husband to add more money in our withholding, like an additional $200 for me from my paycheck, and then $100 from my husband, in order for us to not pay that big of a tax bill at the end of the year. So what that essentially means is that we are taking more taxes out of our paycheck. Not to mention, we're already paying a lot in taxes, but you are telling your employer that they can take out more for taxes from your paycheck before it even gets to your bank account. Yeah, I'm just gonna talk about this a little bit, of how I had a viral video on my Instagram about, taxes, and how it really sucks to look at your paycheck and see a lot of your money get taken out and be paid to the government. And in the current landscape of the government right now, and even before, there are a lot of things that you don't really necessarily agree on that they're spending your money on, your tax money on, and that is really frustrating. But throughout the years, and even now, I've really been working on my mindset of how this is a privilege that I need to not be complaining about, because if I'm paying a lot in taxes, that means that I am making more money than I did before. I think that shift of mindset has allowed me not to feel bad whenever taxes are taken out of my paycheck, but instead find more ways to make more money, and use that money for good, and to improve my life and my family's life and the other people's life that I care about, and not really worry about what's taken out whatsoever. So I think it's just a shift of mindset when it comes to taxes sometimes. But of course, at the end of the day, if you have strategies like what I'm telling you right now to lower your taxable income, then I'm gonna take that as well. So we'll go on to the second strategy that I use to lower my taxable income, and what I would also encourage you as a nurse, that would be is to start a business. And I know not everybody has that entrepreneurial mindset. Not everyone wants to be a business owner, but our society, really, our whole like system is not meant or not for employees. Like, it's almost like it's made for business owners, for the wealthy, for the big corporations. And if you can start your own side hustle, even if it's not something that you don't have to make millions of dollars on, then I really recommend that you take advantage of the tax loopholes, tax strategies to lower your taxable income by having a business. I started my business back in 2023, so I actually have an education slash, writing, content creation business that I started in 2023. And last year is my actual really full year. And I was really happy because I didn't think that I would make that much money from my side business. Mind you, this is something that I just do on the side. I still have a full-time job, and I am actually profitable. And the crazy thing with having a business versus being an employee, I want to show you like how it looks like, of how the money that you make as a full-time employee and as a business owner is taxed so differently.
Fundamental difference between employees and businesses, and it all comes down to when you are taxed. Check this out. Each one makes $100, but the employee has their taxes taken out before they get their money. This only leaves them with $80 in cash. After their living expenses, they're left with $5, but they had to pay a whole $20 in taxes. That's a lot. Let's see what happens to a business that makes the same amount of money. They don't pay taxes on what they earn right away. They get taxed on their profit, so they get to spend 75 of that 100 on operating expenses. Now we've got $25 in profit left over. They pay taxes on that profit, comes out to $5, but they're left with $20 because they pay taxes on their profits, not on their top line. Who do you think wrote the tax code?
So from that video, you can see how employees and business owners are taxed. And this is why it's almost like the tax code is written by or for business owners. And this is why I really encourage you to start your own business if you want to take advantage of this tax strategy. Along with that strategy, by the way, is that you have to pick the right business structure. So I think for this year, I'm going to be switching to an S Corp versus an LLC. I'll talk more about all this business things later on in other videos. I'm going to start a series on how I'm building this business on the side as something that is also profitable and maybe I can do full time. There are just a lot of things that you can deduct from your taxes based on the expenses that you have for your business. And so even like this office that I have is tax deductible. Like the office that I have in my house, the utilities that I use to run this whole business is something that you can deduct from your taxes by being a business expense. And of course, this is going to be easy to know of what is and what is not, considered a tax deductible expense. You have to ask your accountant or your tax preparer about it. We have an accountant that's working with us. And frankly, to be honest with you, this is the first time that I've actually hired an accountant because my finances has gotten more complicated. I recommend that if you want to learn more about like how you can take advantage of starting a business and being a nurse and how that can lower down your taxable income, consult an accountant. I waited for so long not to like hire one just because I am sometimes cheap like that, but I eventually said, you know what, like being cheap does not always mean that you have to not get help. I feel that like I would have spent more money paying taxes or getting audited by the IRS if I had not hired our accountant. So be very smart with your money. But anyways, yeah, so make sure that you choose the right business structure if you have a side hustle that you want to include in your filing of taxes. The number 3 thing that we did is invest in real estate. And I am a big fan of diversifying your investments. I know that I teach a lot of nurses how to invest in the stock market. I love stock market investing as someone who works full time, but investing in real estate also has some tax advantages. And this is something that we have talked with our accountant. And real estate really is not owning real estate or like actually having a real estate property may or may not be for some people because this is an active type of investment. Like people say who says that this is a passive kind of investment is lying. And the reasoning for that is because like if you're going to be having a rental property, unless you hire a property manager, you're going to be the one who is going to be managing it. Like, we have a rental property, we have a long-term rental property, and we have to deal with tenants. My husband's the one who's been dealing with this, but he, you know, if something breaks in the house, if they have a problem in the house, then my husband is the one that is getting it fixed. Last year, we were able to actually put that as an expense for owning real estate. Like when a dishwasher broke in the house, or when there was a problem with the AC. So we were able to actually put that in our expenses. And, you know, being able to deduct your operating expenses with owning rental property is one of the advantages of investing in real estate. The other advantages or like tax benefits from owning real estate is that your mortgage interest is also deductible. Is you get a depreciation deduction. So I wasn't even aware of this one. Our accountant is the one who brought this up. And I can talk more about like real estate tax benefits like in another video, but that is another thing that we were able to do by investing in real estate. You can defer your capital gains tax. I know that there is a 1031 exchange that a lot of real estate investors like use, where the capital gains that you gain from owning one real estate property could be rolled over to your next investment property. So yeah, I am not a real estate expert, but definitely this is something that me and my husband have been kind of thinking about more, is investing in real estate. So maybe in the next coming like couple of years, I can make videos on how we're investing in real estate, and I can take you along for the ride. Investing in real estate really is one of those strategies that I feel like a lot of like wealthy people like use. And as nurses, this is something that we can do ourselves as well. So in summary, those are the three things that we did to lower down our taxable, you know, income, reduce our tax bill at the end of the year as someone who works as a full-time nurse. Number one is taking advantage of retirement accounts. So that includes your 401k or 403b and your health savings account or flexible spending account. And at the same time, filing your W-4 forms correctly, like your withholding certificate from your work. The second thing that we did, or I did, is started a side business. And the third thing is investing in real estate. And I know that these are things that you cannot probably do overnight, and it takes time, but you'll be surprised of what you can do in a year. And so if you're preparing your taxes or like thinking about your preparation of taxes for next year, then these are some things that you can probably do to lower down the taxes that you owe at the end of the year. So yeah, so hopefully that is valuable for you. Hopefully that this video helps you. And as usual, well, stay hydrated, stay invested. Make sure that you subscribe down in the channel below. I make a lot of content on nursing, money, and business. Those are the three things I love talking about. So if you are into those, make sure you also like click that notification bell so you know when I upload. If you have any other ideas of what I should be talking about, open to like all those ideas, so make sure that you comment down below as well. I will see you guys in the next video, and yeah, bye.